Hey everyone, Les here from BG Trading. Hope you are well. Today is September 7th, 2022, and the market is keep falling. We expect a further fall until end of September. What to do when the market is falling? What type of stock should we buy? Should we just hold the cash? Are we hedging the market? So we're going to go across few sectors, understand what's happening with the market, our thoughts, and most importantly, what our strategy says that it's going to happen. Let's have a look. Just want to remind you that this video is all about how we apply our strategies, not what you think, but based on our strategies, to understand whether we should be buying or selling stocks. What are the targets, stop loss, FOMO areas, so we can avoid making the mistakes that a lot of traders do, and much more. So if you like, please stay with us and share this video with someone that you believe could be helping or interested. Also, wanted to invite you to become a member of our Facebook community. Buy, grow, sell strategy for share traders is free on Facebook. We go through a lot of great quality content, stock analysis, and much more. So we've been, in fact, warning our members of this community about 2 weeks ago, and we even post a video how we hedge our portfolio when the market's falling. That was 2 weeks ago here on YouTube. So it wasn't for lack of warning that the market is now falling, and we already expect that based on our strategy. The question now is how far it's gonna go, and what can we do now if you haven't hedged the portfolio but you still have cash, because it looks like most of the stocks are not good to buy. First of all, let's understand what's happening with the market here. So that's the ASX200, which is basically the top 200 companies of our market. And you can see, you see those downturns here, okay? And we see some massive pullback over June and July. So the market went up really hard, and I spoke about that before, 11.34%. And if you look at past chart formation, that was already implied. There was a no-brainer that if you understand a little bit market behavior, you would be aware of a correction. Now, how high the correction will be? Well, we expecting at least 5% correction on the market, which is just happening as we speak. So meanwhile, the best case scenario, we will have a reversal from the following days, because we already down 5%. If we look at past pullbacks, on the opposite side, we have 5.17% to the upside here after a big downturn. So same happens when you have a big downturn and you have a big pullback. Now, here as well, we can see the market went up in, that is March 2022, market went up 9%. So what could happen here is, the best case scenario, we would be bouncing back here. But according to our strategy, according to what chart tell us, it has just started getting momentum because we're having a big volume to the downside. And that's what concerns me here. Although we have this bullish intersection, what I think is going to happen is, I reckon this pullback will gonna test this lows, June lows here. And that probably will come followed by a reversal in early October. That's what this chart formation has been suggesting. But we don't predict, we trade with the market. So that means as soon as we see the first signs of reversal, we can then, okay, raise our hands and say, okay, now there is some potential reversal ahead, and we reckon the market could be bouncing back, which means we're going to then close our BBOS position, which is now almost 10% as we speak. If you don't know what BBOS is a Beta Australian Strong Bear, which is a hedge fund. So basically, goes up if the market goes down. And as you can see here, we bought right here when the market was up about 11%, and we are now almost 10% up in that sort of position. So what I reckon I still make another 5% out of this. So I reckon we can see BBO, we will soon see BBOs around $4.50, and we likely to be closing our position and be buying stocks that have been oversold. Now, let's come across what is the main reason that this downturn is happening. It's all to do with the macroeconomics. Inflation threats are still present, and it looks like inflation in the US could be worse. August inflation in the US could be worse than July numbers, and therefore the market sort of falling on the back of expecting that central bank of US, the Fed, will actually increase more aggressively the rates than that they thought. Same what happened about 3 months ago. Exactly the same. It's just happening over and over again. And then what we do, we don't try change things. We just trade with the market. That's what we do. And then they're obviously bringing the SP200 in Australia down. And then obviously now people start sort of getting into a panic stage. When the panic stage start to sort of increasing, then we have these massive red candles here, which is exactly what's happening as we speak. Okay, so I'm not actually trying to. I'm not happy that the market is falling, but we at least are protected, and our half of portfolio is hedged, which means we're actually making money as the market falls, so we don't really care. And so our VIP members that entered into the hedge fund. Now let's jump into the first sector, which is the mining sector. So we can see most of the fall is now obviously dragged by the big miners, and then we have BHP now back into $36 level. And to be honest, for me, I think this is an end of cycle of iron ore. Those stocks, those companies like BHP, Fortescue, they have been doing really well. And then people bought in because of the massive dividends. But what looks like, as you can see here, you can see that the SMA 250 starts sort of going down now. And that suggests a change of cycle. Which means it's going to be lower earnings in the incoming financial years. And unless things start improving again, which I don't see that it's going to happen over the next 12 months, in order to get those stocks up again to all-time high levels, which was before. So I'm expecting reduction of earnings for all those big miners, and that's why it's dragging those stocks down. Although I still think if we see BHP around this sort of level, it's for us potentially going to be a big buy opportunity, buying BHP around these sort of levels. And the only reason is if we can make 20% out of a stock like BHP, that's great opportunities and much safer opportunity than making trades of 20 to 40% out of stocks that don't even produce, for example, like lithium explorers or other type of minings. So now let's take a look on key players of EV, which is Allking Limited, one of the our stock tipped to reach all times high. If you see on our one of the last videos, here you go, lithium stocks could reach all times high. 4 weeks ago we tipped 3 stocks to reach all times high. So we're just reviewing what's happening and what I think they still could reach all times high, but I think they are now too risky to jump in to the current market. So now Allking Limited's one is actually reached its all-time high, which is great, but now suggesting that the price could fall if it doesn't break out. And if it falls under the SMA, say around even like under $12 or even around $10, that is again a big buying opportunity, because this company has done incredibly well over FY 2022 thanks to increased production, high lithium prices, has been profitable for the first time, which is great. But the best one really is Pilbara Minerals, which is kind of sort of setting up the same type of chart, breaking out to its all-time high. In fact, it's positive today, and we probably most likely will see it's breaking out here. But I wouldn't buy, despite I think it's going to break out. I think it is. Again, stick with the strategy and only buy around the SMA levels, which is currently trading at $3, which is almost $1 discount from the current price. So just be careful with this. If holding, I think it is. If anyone that holding this stock, I think it is a hold, but not a buy at the moment. Not to buy at the moment. Now, next Australian lithium producer, CXO, also doing really well compared to other stocks, suggesting a potential breakout to the all times high, as I also mentioned in the video before 4 weeks ago. But again, it is a little bit too dangerous based on the macroeconomics for the whole market. And if the market panics, I think there will be a sell-off across the board. And I don't want to be buying stocks that are in the FOMO area, despite they have a good growth prospect and good, in theory, fundamentals, although CXO is still not generating any revenue until end of year. Now, Lake Resources is one of the stocks that we've been trading a lot as well. And today there was an announcement of a new CEO, which is great. New CEO, it's great for the company. It's sort of getting away a little bit from the uncertainty, so investors could now start buying back a little bit. But unfortunately, as I said, still not buying for me. Probably want to be buying under $1 here, and the reason is simply because the market is still set to fall further according to our strategy. So I rather not gamble on those type of stocks at the moment until they actually get really cheap. Okay. Now, the last stock in the sector that I wanted to talk is consumer defensive, which is A2 Milk and Bubs Australia. Now, as you can see, A2 Milk has done also an upgrade on its earning finally after massive downgrades over and over, and then it looks like it's going to be has been benefiting from opening trade and start bounce back its profitability. Now, better than A2 Milk for us is Bubs Australia, and this is the stock that I want to go a little bit deeper into this conversation. The only reason is Bubs Australia for us is standing out at the moment. First of all, because it's down from its latest peak. It's about 40% down from its latest peak, which we suggest our VIP members to sell there and take profit right here. A lot of analysts are have tipped to take profit here and run. I don't think it's a run case. I think it's a case to jump back into this stock as soon as the market conditions improve. And the reason is because the fundamentals for Bubs Australia on our review has never been better than it is at the moment. And that is all to do with massive improvement into Chinese Bubs Australia China, that if you can see here, it improved. And let's just go through here. Blah, blah, blah. It's improved about 179% growth in China. Australia is a modest growth, but it's also a modest market. And then obviously in US. And this is where the big tick is for me. Some analysts has been saying that there was one-off trade, massive trade in the US, but it turns out that Bubs Australia is just getting a permanent FDA registration, and that will secure Bubs to keep trading in the US on ongoing basis, and therefore not just increasing its distribution channels, but also creating awareness across the consumers that Bubs Australia is a really good quality infant formula product, and therefore it could bring massive increase of revenue and even growth margins to the business. Another thing interesting for this company is that this, for us, I believe this is a recession-proof product, because people not going to use disposable income to buy this. Consumers will keep buying this because this is food is always an essential product, and despite recession fears, sales should still perform really well as diversified assorted and high valued non-discretionary spending item like this. This is a product that people will keep buying, but will cancel holidays, cancel other things, but will keep buying this because they have to, and they wanted to give it best for the kids, for the child. Now, the strong US penetration again continue to extend, and now Bubs have its product, its tins, available for consumers across 42 states in the US, over 6,000 stores, and have just entered into US about a little bit more than a year ago, back in 2021. So it's a really good move for Bubs Australia, not really depending on China as much anymore. However, it's going to keep increasing China. And the improvement with Diagonal channel, which was a major disruption due to COVID, that could help massively, and already have been helping companies like Bubs Australia and even A2M Milk to improve. So I think this is a stock that for at least for the next 24 months would be a good addition to anyone's portfolio. Okay. Now, just a reminding that in September, FDA will issue further guidance on how Bubs Australia could meet FDA requirements in order to continue to supply formula to US on regular basis, and that's a key winner for Bubs Australia. Okay, so my opinion, Bubs Australia, very positive. Wait a little bit this market downturn to finish, and buying around this sort of level here. There's a strong hypothetical support, and could see easily a 20 to 40% opportunity to hold to trade this stock. At the moment, we could see easily 30% opportunity, but obviously we need the market to bounce back as well. So I wouldn't be hurry on this, but I would be aware of potential formation on a Heikenach, just like this, which will be indicating a bounce back. Okay, so if you want a full access to this analysis, will be available on our free Facebook community by Growth Sell Strategy for Share Trader. Details in the description below. Let us know what you think in general about this video. If you have any questions, please put in the comments below. I'll be delighted to take a look and answer all those questions. All right, guys, at the moment, what to do, really, answering the first question in this video, I would hold cash. If not hedging, I would hold cash until end of September. Look what the market formation is. Let the market go through this panic stage, which is just happening as we speak. And then, obviously, be buying on the first signs of reversal, but not now. Patience is key to succeed. So let's have a patience. Thank you guys. This was a long video. Thanks for watching till the end, and I'll see you in the next video. Bye. The whole idea when we designed BG Trading BGS20 strategy was to use only a set number of indicators to make it simple and clear to understand and to be able to apply our KPIs very easily and very effectively. So you don't have to be any Wall Street smart person to be able to apply those strategies. We really hope this course will help you to make better decisions and make successful trades. See you in the course.